This industry has some deep roots into our history. First off, read this disclaimer carefully. We will look at JO iPath Series B Bloomberg Coffee Sub-Index. It's an ETN. Coffee is something I categorize as a natural resource. Okay, so here we can see that coffee is here. It is in the softs category. You can see that we are around 10% plus from the 52-week lows. We are still minus 26% away from the 52-week highs. The order of the day is that we will first look at the charts, where something very interesting is happening, and then we will look a bit at the ETN. Finally, there will be a very critical segment about ETPs and the difference between an ETF and an ETN. And this coffee product is an ETN. Here is the long-term picture, weekly data points. We got all the history we can get here. This pattern is very, very intriguing because this is a variation of a rounding bottom pattern. The psychology here has changed from being rather bearish, bears clearly in control. This right here is a much more even battle between the bulls and the bears. Here, the bulls make a huge power move, bears fight back, but bears are not able to break this level. So this is the bulls flexing. Hence, coffee, after the recent pullback, it is at a very interesting level where buyers have stepped in many times in the past. Does that mean that if you buy here, you're guaranteed profit? Of course not. That's not how the market works. But the chart speaks for itself. This region is a buying region. It tends to be that. If you look at the RSI, it's in the neutral zone. If you look at the accumulation distribution line, you can see that it did not corroborate that rally, so there is a bit of a divergence here between AD and price action. Hence, I would consider this a more speculative bullish opportunity. Though I would feel more comfortable being bullish here than having a bearish, short position. Looking at daily data points, we even get some statistical correlations. There is a 10% positive correlation between coffee and the S&P 500. Coffee, of course, it's a commodity with tons and tons of history. This is a real product, something very tangible, something a lot of people consume. There are alternative ways to invest in coffee. You can, of course, get into the Starbucks stock, but this is, a pure play. Doesn't get more pure than a commodity index. Here with the daily data points, let's load the moving averages. Okay, so here is the recent battle. We did yesterday fight the 10-day moving average, which has been a resistance level. The thing is that we have been able to reclaim the 5-day moving average. It's turned positive. There are tons of resistance levels here from these moving averages, and you also have horizontal levels of resistance. The reason why coffee is very intriguing here is that just look at the history. This has been a buying zone, and if you look at some of the previous recoveries, like here, and here, they have a tendency to be relatively sharp. Only in this instance here do you have like a smooth, cautious pushback from the bulls. If we look at the accumulation distribution line, it reached a low here where you could say where you could make the case that there was peak bearishness. However, it has been rising, and you can see that this low on the AD line is actually higher than this one, which is also, you know, there's something interesting. This could be an indication that some of the more sophisticated money is accumulating positions here on coffee. Okay, so that's coffee. Something interesting happening here. Now, if we go here to Sachs, they have a number 3 holder rating. They consider the ETF risk to be high. What do they mean with ETF risk? Okay, so Sachs proprietary quantitative models divide each set of ETFs following a similar investment strategy. 3 risk categories. Yeah. Let's go here to ETF.com. And Joe is just about the only practical choice for getting exposure to coffee prices in an ETP wrapper. The alternative way to get into the coffee market is through futures, but futures, they have a very high barrier of entry. The note tracks a single coffee futures contract at a time, purchased 2 or 3 months out and held until the month of maturity. The note tracks every other contract from February through July, but switches to every 3rd contract during the fall and winter months. Although this methodology does not perfectly imitate our segment benchmark, which uses front-month contracts year-round, Joe still serves as a decent proxy for spot coffee prices. Assets under management is only $41 million US. Average daily dollar volume, $2 million US. So definitively not like a super liquid product. That is because many of the type of traders that get into coffee, they go to the futures market. Though I would say that this is just illustrative of how many investors do not have a very sophisticated approach to the market. They are more comfortable getting into something like a stock than a commodity that has been around for thousands of years. I mean, coffee has a lot more staying power. Yeah, I really like commodities. Okay, now let's have the educational segment. Let's make this big. Okay, ETPs Explained. ETPs. Okay, so you have ETFs and ETNs. That's what people mean with ETPs. The problem is that ETFs, they are often used to refer to all ETPs, though there are some key differences between ETFs and ETNs. The problem is that if we started to say ETPs, many will be confused because they have no idea what you are talking about. Hence, it's become just commonplace to call both ETFs. It's a mess. Yeah, the things that ETPs are severely disrupting the fund industry, among other things. Mutual funds and hedge funds industries, they are in major continual decline. Mutual funds and hedge funds, they are not openly traded on the market, like a stock. However, ETPs, they are traded like stocks. You can get in and out when you want, of course, dependent on the liquidity of the product. If you get into mutual funds and hedge funds, you usually have to wait up to numerous days from the point where you want to exit a position until it actually is exited. Exchange Traded Fund, ETF. They are a popular alternative to mutual funds. They track an underlying asset that it holds, and it's a basket of financial instruments. There's many very cool ETFs that track sub-industries like robotics, artificial intelligence. There's many really interesting ETFs out there. The ETF can be based on stocks, bonds, even commodities, so on and so forth. Exchange Traded Notes, ETNs, they track an underlying asset. There are less tracking errors than ETFs. They are, however, unsecured like a bond. Basket of financial instruments publicly traded. And the thing is that an ETF, it can be based on stocks, bonds, commodities, etc. The tendency is that stocks and bonds are usually reflected in the ETF market, while ETNs, they tend to focus on commodities. Let's quickly look at what's happening in the market. Okay, so here you can see the futures before the market opens. There seems to be a bit of a melt-up. Now let's actually look a bit here at the futures. US 500, CME, daily data points, S&P 500. So yesterday we did have a very sizable pullback in the futures. We went all below the 20-day moving average. If we compare that, let's first here look at the SPY, S&P 500, and you can see that the SPY, it tested the 20-day moving average yesterday, but didn't go much below it. However, if we do go to the futures, S&P 500 futures, you can see that there was a deeper, much deeper pullback. The buyers, they stepped in very aggressively, and you can see that today the futures are already testing here this blue 5-day moving average. Yes, the issue here is that we do have a very bearish cross happening also today, with the 100-day moving average crossing below the 200-day moving average. Yeah, the thing is that with the extreme amount of money that the central banks are pouring into the market, you have to be careful with the bearish ideas, which is why I consider myself to be a normative bear. Okay, I think we should have a bear market. It would be healthy to have some repricing of financial assets. However, there's a big difference between being a normative bear and being a bear in practice, to actually put on that position. In order to do that, I think we need to just see more weakness. Though, yeah, this day, it's going to be very important because we are in this more fragile territory here. Here, more clear bullishness. Now there is much more of an even battle. Whatever you do, of course, whether it's coffee or the S&P 500, you want to be very careful. This is definitively a time to be very diversified, which is why I bring to the fore a lot of different kinds of products, different kinds of industries, because that's the best way to be truly diversified. Just having a mix of stocks, that means that you are still all in the stock market. Meaning, if something drastic were to happen in the stock market, you do have all your eggs in that basket. The golden realm of true diversification, that is to create portfolios that are market neutral from a statistical standpoint. Let the trend, of course, always be your friend.